Hey everybody. Oh no, where we at? Hey everybody, welcome to another episode of BlackTEE RealTEA with Jared G. I'm the host, Jared G. And today we are going to cover traditional financing. First of all, what is financing, right? Financing is nothing more than the funding used, or the capital, the cash, the bread, whatever you want to call it, used to get the deal done. Alright? They got three most common types of traditional financing. Alright? We're going to go over those. We're going to talk about their benefits to each one. We're going to talk about who they're geared towards. And we're going to find out, most importantly, how they can benefit you. Right? So, let's go on this journey right quick. So, the most basic type of financing that an institution or a bank or a mortgage company or whatever they'll give is called a loan. A loan is a sum of money, and how they make their money is they charge you for their service. So they'll charge you in terms of an interest rate, and determining factors such as credit and other variables will allow them to lower or increase those interest rates, because credit, again, is just how much a service or a business can trust you. Basically, it's a sum of you making payments over time. So the most common loan types they have are the FHA loans, VA loans, and conventional loans. Conventional loans, just going to tap on that right quickly. They are for the big boys, the big girls, when they want to start owning malls and things like that. That's when these loans come in handy. You can do anything with them. You can build, you can do big stadium arenas, you get those type of loans. The interest rates the down payments for these type of loans, if you're going to be a owner occupied, meaning you're going to live in the residence for at least a year, you can pay between 5 and 10%. And if you're an investor, anybody not staying in the property is an investor. If you're an investor, your rates can go as high as 30, but typically between 10 and 30 is your range. Okay? And since most of us are going to play at real estate and start playing Monopoly, we're going to be investors. But that doesn't mean we can't use the owner occupancy, But there are better vehicles to do that with than conventional loans. Speaking about that, in my opinion, the top traditional loan is the FHA, the Federal Housing Administration government-backed loan, right? You get rates as low as 3.5%, meaning for every $100,000 purchase price of a house, you only need to have $3,500 to put on a down payment. They are flexible when it comes to your credit score. If you have a lower, I believe I've seen someone with under a 600 now get approved for an FHA loan. That's amazing. Okay, but typically they want you to have a 640 to 680, and you're going to be beautiful. And the beauty of the FHA is they cover all residential real estate. Residential real estate is anything from 1 unit to 4-unit fourplexes. And with FHA, you can get a 4-unit or a multi-unit mixed use, meaning you can have like a store in one of the units, or you could have a salon or a nail shop. Okay, so the way I was taught is to always start off investing. You don't want to start off with a single family because you don't have any income coming in, and we're trying to generate income passively, and If we start off with a 2-family, we can always scale up to a 4-family or another 3-family, something like that, okay? It gets you your feet wet at landlording. And you get used to living for cheap or for free, depending if the other units pay for your mortgage or not, which it very well can, because you can have a 2-unit home where the mortgage is around $700, including your PITI, principal, interest, tax, and insurance, and you can have the other unit rented out at $1,000. Pay off your mortgage, take care of that, and you pocket some money. So now you're getting your feet wet, passive income. It's so cool, right? So that's an FHA loan. There's another type of FHA loan called a 203K that will allow you to build. So if you see a house or a home and it needs some TLC, 203K will take care of that for you. The price of cost of the rehab is included in the loan, so that's a giant benefit. And of course, sorry, I didn't say this with the conventional, but also with conventional you can build, you can do anything, okay? That's conventional anyway. All right, so that covers the FHA, and then how that can benefit you, I mean, we've already talked about, but once again, you stay in a 1 unit and you live for free or cheap, which is amazing, while still you may be pulling in some additional money. So now you and your family, or you by yourself, you have you know what it's like to experience, not paying for the roof over your head. I mean, you are, but it's someone else is paying it for you. That's amazing. The next type of traditional financing, and the final type we're going to go over, is the VA loans. VA loans are people for our military. Their spouses can also use VA loans. That's a pretty awesome perk. And the I did talk about the down payment for the FHA. Cool. Look, remember, FHA 3.5%. Anyway, the VA loans can have a down payment that's like extremely low, 3%, 5%, whatever, or no. One more time. No down payment at all. All right. So with that, for our military, our vets, and our active duty, y'all can utilize this sort of loan, and you can start creating residual income, passive income for yourself, so when you come back, or if you have to leave, then your family will be okay, because that's what we're about. We're about taking care of our families, right? And sometimes it's only us, but sometimes, a lot of times, we have family that depend on us. So that extra vehicle of passive income where they can live for cheap or free, with having a multi-unit. Now, I will say this. The VA loans will cover residential up to 4 units, but they want you to live in the property, okay? So, owner occupancy. Oh, also for the FHA, you need to be owner occupied for at least a year. All right, that's the biggest thing. That's I guess a stipulation. It's not really a stipulation, like in terms of being negative, but it is a stipulation. And remember, both the VA and the FHA loans are government-backed loans. So that's phenomenal. And conventional loans are not. There are places that will give both of these. Like, you can go to banks, you can go to mortgage companies, and they'll offer these sorts of loans. And you can shop around. I think, now don't quote me on this. I will not say don't quote me on this, but I want to say you have up to 7 times someone can run your credit when you're shopping for your loans before it negatively impacts. So, all right, guys. You guys have a great day. Thank you for lasting this long through another episode of BlackTEE RealTEA with Jared G. And also, don't chop me down today for not having a black tea. All right? Y'all have a good day.